I would say the biggest risk that would apply to all the asset classes is I think each asset classes have some or many unique attributes is rising construction and land costs. I think with the acceleration of construction costs far beyond inflation, it's hard to underwrite new opportunities, and I see that being the biggest risk for the industry.
Excluding any significant external shock, I would say the biggest risk is actually a combination of uh, increasing interest rates at the same time as increasing construction costs. In particular, where those construction costs are increasing faster than general inflation. And so you get a disconnect, and that's actually what we've been having the last couple of years. So those the construction costs have been increasing 5, 7, 8% a year for the last couple of years, while general inflation is more like 2. So that can cause a little bit of distress in the sector, a little bit of concern. So far, it hasn't stopped development, but if we don't go and get that under control, it probably will. The offset to this is NOI growth. That's basically the best defense is NOI growth, and where to find that NOI growth and in what assets is the key focus for us at Bentall Kennedy. I think the other risks, if I go specifically to asset classes, would be Alberta office, and then retail that I would say is undifferentiated or not unique enough. And those are two particular areas that will continue to have some challenges next year.
Yeah, so for 2019, in terms of risks, Fiera Capital, who is a parent company, are actually calling for a recession late 2019, early 2020. So I think our biggest challenge is really preparing for a little softening in the market. And I think the greatest risk is probably the cost of money. We may be forced into a rising interest rate environment when our neighbors south of the border may also be raising interest rates. But we're not very well equipped to deal with that occurrence. We fiscally, our governments aren't organized in a way that they can combat this very well. So we think there's a little bit of a rough patch ahead of us in the real estate market, and we have to, plan for that.
I think the best opportunities in 2019 or over the next 12 to 24 months really rest in the multi-residential, which is our focus. So I may be a little bit biased, but we know the industry is considerably undersupplied versus the upcoming demand. So we see a ton of opportunity to acquire, do value add projects, and develop across the country.
As far as opportunities over the next couple of years, I would say it's a continuation of what we've been seeing. We see a lot of opportunities industrial, particularly on infill industrial, e-commerce fulfillment industrial, and I think you'll see, even though it feels like an awful lot of growth has happened and a lot of shift has happened, you're going to continue to see more strength in that area. Multifamily, particularly in, I would say, Toronto, Vancouver, and Montreal, you'll see, again, notwithstanding the very nice growth that we've had for the last little while, you'll continue to see some very strong growth in those areas, and so that's an area of focus for us for the next couple of years. Office, again, in Toronto, Vancouver, and Montreal versus most of the other markets in the country, still have some legs. Those areas would be probably the most interesting. If you wanted a contrarian play, you'd look to sectors like retail, where you can pick through maybe slightly more distressed assets and add some value. You might look at the pricing of secondary or B assets or suburban assets. But in large part, our focus will be on the preceding areas that I described.
In terms of opportunities, as always, we see there's always seams and unique opportunities that you can exploit in the market, and we'll lever our partnerships with people like EmoStar and Canderel and the Bridgeport Colonnade to find those opportunities where we can create value. So I think the opportunities are in creating value in the assets you hold and in finding assets that are undercapitalized or mispriced. And that's always been an opportunity in the market, but it is within the shadow of a possible recession coming forward.